Hello, hello, and welcome to the stream today. I'm just going to start sending out stuff for the just so I can put the links into the Discord. So just bear with me a couple of minutes, just while I go put the announcements in. Two six Y for today's. Not everyone. Here we go. Right, link sent in. Right. Hello, everyone. How's everyone doing? Um, Unfortunately, got me again today. Kieran's slightly busy, so you've got me to go over some Darwins today. If anyone wants to put them in, if not, we'll have a look at the markets and then take it from there. So yeah, just wait till a couple more people come into the stream, and then we'll get started. So, how's everyone's day been with the markets today? I'm slightly down today, down 0.85%, which is not my best day, but for the start of this sort of year, it's not been crazy good for me at the moment. Just pretty flat, I think. Yeah, so up just slightly less than 1% this year so far, which it can happen. Like sometimes I get slow starts to the year. If you look at, obviously, it's quite hard to see from this track record of mine. But even when I was trading, like before I started trading on Darwinex, sometimes I either seen January was electric or January was a bit quiet. So it can happen. I'm not too phased. I'll just keep trading the way that I do, keep adding more systems, try and filter out some of the good stuff as well as the bad stuff. So we could if no one else has got a Darwin we want to go over today, then I'll just do a bit more dive deeper into my own at the moment. I don't actually share the assets, do I? I should probably make that accessible for everyone. But you know, when we're reviewing Darwin's, we want to see a few metrics for me that's a lot more investable for me, but also like it's good to sort of measure how your performance is doing and how is it like handling against other like institutional traders and things like that. So yeah, these are things that I like to have a look at. So if we go to assets and timeframes, like this is something that I've been covering a couple of times. I actually done a whole session on actually going through my analysis of my portfolio on my FX book, and we had a look at what was doing well, what was not doing well, and one of the things that we did find was just purely by using the metrics of DarwinX is my Tuesday was was slightly poor. Now since we made the change, we've started to see a little bit of up. So now somehow we're up across the whole board for days of the week, but still Tuesday underperforming as such. So we dive deeper into that. We had a look at individual strategies as well within my portfolio, and we found that I was sometimes like short in gold throughout last year, and last year could have been a really good year for me if I made a tweak to some of my systems. And like some of the tweaks are not like anything like major. Like it's just a robust sort of way of doing it. Sorry, trades. How we doing? How we doing? Thank you for joining the live stream today. How we doing, White Rose? All well. All well with me. How about yourself? So yeah, like I started making changes at the start of this year. It sounds like it's the changes aren't going well, but to be fair, for some of my strategies, there's not been a lot of volatility as such for me to take like advantage of. This is probably like the least amount of trades that I've had in a single month in God knows how long, which is fine because I'd rather be trading less in times where things aren't moving a lot for me than trading a lot and getting chopped up. So I'm just waiting for the volatility to come in because that's the sort of trader that I am, and when it comes in, I'm hoping to take full advantage of it. But definitely having a look into the metrics over these sort of things is really good, really good. This is my own one because no one else has put a Darwin in yet. This is probably my second time doing one. So if you have your Darwin that we could have a little review at, then fair enough. But this is me just going over things that things that I need to have a look at and things to improve on as well. Like, as I was saying, we're going over days of the week and we've seen Tuesdays quite poor for me. So what I did is I went back, had a look at my whole portfolio, started testing different things like singular days of the week to see, is it just like a phase right now with some of my strategies that Tuesday's just underperforming, or is it like a consistent thing throughout the whole time? For the most part, there was some singular strategies within my portfolio that Tuesdays were not great. But for the most part, it wasn't anything too wrong. It's just for that singular day, it's kind of underperforming at the moment. Now, one of the things that I did look at is, you can see I do take quite a lot of trades. And if anyone doesn't know, obviously I'm an algorithmic trader, so I have lots of systems run at the same time. This kind of looks like I'm overkill, but it's because if I have one singular trade idea, I split the orders up, so it's taking different variations of it. So it kind of looks like I overtrade, but it's just a way of me. I would say for like one trade idea, it can sometimes be split into three. So then I'm taking advantage of short and long term volatility, but also like intraday moves as well. So it looks like overtrade, but it's just the way that it's set out. It's, if it was, yeah, I don't know how best to explain it, but one thing that I have been looking at is the American section for me. Like, you can see like it's really underperformed. Like my performance around the European and Asian session is really strong, but the American session is quite poor as well. So I've been looking back to see, okay, what strategies are underperforming? Where is my costs coming at? And the way that I did that is, unfortunately, I can't do it on this because I need to select by asset. So I need to kind of do my own profile and unlock that. But I did have a strategy on pound yen that it was really good to the long side, but the short side was tearing me apart. So I had to sort of like remove some of the strategies. Return distribution by day of the week is still confusing for me, to be honest. Is it when you open trades or when you close them? How does the swing trade work? I'm pretty sure it's generated, right? So it's whatever. So the chart shows accumulated returns generated. Number of days of trade is. Uh, Actually, this is something. Hopefully, can I confirm this on my FX book? Let me give me 2 secs. I want to see because I'm pretty sure it's always done by sort of entries per day. My Facebook. Just bear with me so I can have a quick look at my own and see if I can get it out of that. I mean, for me, I'm not really too concerned about days of the week as such. It's just something to kind of take note of. And what I do is I go back and test it anyway to kind of see, is it worth keeping? Is it worth not? You would normally do it in like your sort of optimization of when you're building the strategy. For me, having a look at the days of the week technically, but it's not something that I'm like too crazy about. So let me take away. Sorry, I'm not actually showing this on my screen. Let me flip this a little bit, and then I can share. Hopefully this shows right. So just bear with me a second, because I can't see the screen now. Okay, so we're gonna try and confirm this just using my analysis just to make sure, because I am not. I don't really know. Let's see. Okay, interesting. I don't think that's actually showing a true representation because there's no way it's a 7% drawdown on that period. Maybe this is just something that's not working. Let's see. Symbols of okay. All limits selected. All margin numbers selected. Remains Tuesday. So you can change it by opening that. Hey Rob, how we doing? Let's see if we can actually get an answer. If it wants to play Bob. We're both quiet yesterday. What is in on the stream? Okay. So from this, it's saying that my opening on Tuesday is negative. I want to just see how it is enclosed to see what it represents. Closes that? That doesn't line up. Doesn't line up. Let me see if Thursday lines up. So Thursday's positive. Okay. Thursday open. Because what was it on Thursday? So Monday and Thursday are my best days. Let's see if that's true. Oh, oh. 2 seconds. I don't know where this is going now. I think I've just confused my computer. Anyway. Mute stupid. Yeah, I don't think comments went through. Yeah, I don't. Yesterday, I think like there was something wrong with the stream that the comments weren't coming through. So Tuesday was third. Was it Thursday? We looked at 14.88. Yeah, it's not showing. Wait. Nope. Right. Okay. So yeah, maybe it is Thursday, Monday from open time. Yeah, that's about right. So I think what it means is from trades opened. Let me see if it's. Let's see what Monday closed is. Yeah, we can give a good answer on this. Closed still the same. So Monday was 20%. But then again, like it's obviously scaled up. Keep forgetting that. It still doesn't make sense. Everything seems a bit skewed off. I think it's like times two. It's probably because like I've deposited like as time's gone on just to make sure everything's going well. So um yeah, I don't think I can say whether it's opened or closed. So if we have it. Maybe. Absolute gay 17. Unsure. I mean, for this anyway, like what you would do is you would just download your HMTL file and then stick it in Quant Analyzer, and then from there it'll tell you profit per day for like closed profits rather than opens. So yeah, I suppose it could be a little bit like misleading, but most of my strategies are intraday anyway, so I would know that most of the time that it's being open and closed on a Tuesday. There's a few strategies that do potentially hold. My average trade time is about 23 hours, maybe just less than that. So like almost a whole day. But yeah. So yeah, these are sort of things I do have a look at, but mostly what I'm looking at is individual pair, and then what I'm doing is I'm looking against drawdown, against stagnation period, and then from there, kind of analyzing it from there. So I don't think my correlation is quite high with someone else, whoever this is. Quite cool to analyze this person if I can. I am not very good at using this platform. ADDJ. Okay, let's have a look at them. Okay, that's really interesting. That's a really good looking sort of like equity. I'll do that. Thank you. Great advice. Yeah, I mean, like I always look at everything individually rather than like overall. And saying like every strategy's different. For me, every strategy's different. Every market's different. So like I would more be curious of what the individual strategies are doing, but also using Quant Analyzer as my aid and guidance to analyzing these things. I don't really make things. I don't really make too many like massive changes unless I can see it being like consistent and it's not just cherry picking like the last 2 years. I want to see that this change of potentially, let's say hypothetically, Tuesdays have been really poor. I want to see, okay, this might be poor for the past 2.5 years. But how was it over the past, say, I don't know, 6 years after that? Because it's not as if it's like I mean, if it's like a clear losing, like you say, you're like up 60%, you got minus 10% on like Tuesday, then I would say, okay, we definitely need to have a look at that. But for me, it's like break even, so it could just be like a flat period on that singular day over the whole portfolio. These things can happen. I wouldn't be like going about saying, okay, I'm doing poor Tuesday for the past 2 years. Let's remove Tuesday, because if you look back and your strategies show that you do have flat periods for singular days, then that could change very quickly, and then you're missing out. I'm expecting my first payout today, but will I get an email or something telling me how it was withdrawn? I'm pretty sure in Darwinex Zero, like something comes up in the sidebar after, like during the, like as soon as it's like been the 3 month period, then you can click and then do a payment process or things like that. So just keep an eye out for that, and it should be there. Any problems, obviously, you can just DM me tomorrow, or we can get in touch with support. So don't worry about anything. We'll make sure everything's all good for you. We want you to be here for the long run. So any problems, obviously, just get in touch with me, or we can get in touch with support, and we'll help you make sure everything goes smoothly. Okay. So yeah, analyzing this person, this is quite a wild this is quite a wild track record. Actually, it's very impressive. So far, no negative months, which is very rare to see. I think Kieran shared someone's portfolio with me that's almost been a year and a half, going on 2, and they've had profitable months every month, which is wild. If you can achieve that, that is crazy. But the drawdowns look decently healthy. There's nothing crazy in terms of worst days. We'll have a look at the assets and time frames. We can have a look. So Forex 37%, indices 1, 15 on commodities. Okay, dollar yen. Yeah, so dollar yen and gold making up the brunt, which is it's just fine. Decently volatile markets if you're a breakout or trend follower, so not too bad. But overall, not bad. Again, we're seeing so maybe this is why we're seeing similarities, because I trade dollar yen and gold decent amount. I would say half my portfolio probably makes up of those. And again, we're seeing negative return in the American session. So it's good to see that it's not just me that's having this problem, like trading these pairs. It's other people as well. So yeah, I'll have a look over it. Like, I'm not too concerned. If it keeps doing that, and the next, like, because then that means I'll have over 2 to 3 years data to say, okay, your American section is not working. Then I can have a look as to, is it anywhere specific, like, for example, like when New York opens, we do get like a burst of volatility, and maybe the positions that I'm already in are getting chopped up or something like that. So yeah, maybe it's to do with that. And again, this person's struggling on a Thursday, which is different from me. So yeah, interesting to have a look. Rob, you have a secondary UTJQ. Cool. We'll have a quick look. Is it already like going, or is it in calibration? Okay, let's have a quick look. Yeah, so it's fairly new, so there's not too much I can say as such into looking at metrics or anything like that. But so far, looks pretty good. Pretty good start. So far you're doing better than me, so well done. But yeah, drawdown's quite. But then there's not enough trades for me to even make comments on anything like this. You've had how many trades have we had, Rob? 10, 3, yeah, 18 trades, or yeah, okay, cool. But no, looking stable. Is this totally different from your other portfolio, or very similar, like methodologies? Are you trying something different? It's always cool to see what other people are doing in terms of like, are they trying something different? Are they, doing something like, the same but like an updated portfolio? So like what my idea of what I'm going to be doing next is like, I've got my other portfolio that's my test account, but what I'm away to do is I'm away to start applying everything that's an IME, but also anything new to see how does it like work within my whole portfolio as a whole, rather than saying, okay, this strategy is good, let's apply it to IME when I don't know how it all works together in terms of portfolio. We can always put it into Quant Analyzer. But what we're not seeing is on a day by day basis. Like correlation could be very low over like the amount of trades, but what might not be evident at certain times is overlapping days where, hypothetically, let's say I find another strategy on gold that's good. I want to see how it interacts with the other gold strategies that I've got live as well. So the best way for me to do that is to have that second account with the new strategies with my current portfolio within it, and then see how it all kind of goes together. So yeah, that's the sort of thing that I'm building out right now. So then I'm always in that research and development sort of phase to make sure that anything that I am bringing in, I know works within my sort of portfolio and construction. So then when I do bring it in, I'm not going to see any like crazy like extra drawdowns or intraday drawdowns or increased volatility in my account, because these are the things that I'm very like kind of interested in. Like I could add another strategy and it overall increases the overall technical gain in the hypothetical of the account. But if it's going to increase my intraday volatility to the point where I don't think it's necessary, then I will not add it and I'll just keep it on that second portfolio. Or I might just open another Darwin as well and just kind of have that sort of like third one going in. So, I'm trying to build that sort of feedback loop as in the end product. So like you've got my main sort of building machine. If anything's good, it goes into IME. If it's not, I put it into my sub account. So that's the sort of process that I'm trying to build. So it's always going somewhere that I'm always getting feedback and data. The good thing is like the metrics that you get in DarwinX only enhances that, as well as linking it to my FX book as well. So what you've got is a constant thing going in and out. Will I get any credit since I'm correlated in gold? And please keep telling the conditions. So I'm pretty sure like you get like you'll get your monthly fee credited back to you if you've paid for a yearly or 3 yearly. I'm pretty sure they've got a process that's called like credit B, and then it's held there that then you get the equivalent added onto your account. I'd need to double check with that. So drop me a message, and then I can find out from the team exactly the process, and then I can give you an exact answer, because I don't like saying, yeah, this is what's going to happen, and then it's not. Like I'd rather like get the exact answer and give you a 100% answer, rather than for me it would be classed as a fake answer or a made up answer. I don't want to do that. So yeah, just drop me a message. I'll go find out from the team, and then I can get back to you. Check PWBV. Okay, we'll quickly just go over Rob's, and then we'll go on to that next. So we'll just be 5 minutes on Rob's, then we'll go into that, because looks like Rob, you've been making a little bit of a recovery. Like obviously you had that drawdown, but I wouldn't be too worried about that, because like if that's within your metrics, Rob, then the recovery will happen if it's within that. So yeah, I'm not too disconcerted about that. I mean, it was a deep drawdown, but you're starting to kind of recover a small bit, and hopefully we can get back up to all the time highs soon. So that's good. A 12.76% drawdown in the grand scheme of things isn't that bad. Let's say a couple of years down the line, you're at 100% return, and you've still got that 12. No one's going to be really thinking about that, as long as you consistently keep managing risk well. Like for me, it's always about like I would rather see a Darwin, right, that has got a 10-year track record, and like it will say max drawdown 20%, but over the past 7, we can see that they've improved as a trader, and we can see that the constant evolution of research and development. Their drawdown actually over the past 3 years is only like 10. So we always want to see natural evolution. The longer track record you have, even if it's good or bad, is always a good sort of metric to look at as well, because You could have had an account, right? Hypothetically, it was like 3 years and then exploded nothing, right? And then you start a new one, and then it's like all good for a year and a half, but then it's like you've kind of just done that to hide what just happened, if that makes sense. So like I'm always about like, I'm not going to hide behind anything or anything like that. So I always think it's good to have like a longer track record, and you can exactly explain your process as well, because you could have great results and people could ask, okay, what about before then? What happened? And then you don't really have an answer or anything like that as well. So just keep going with this. Like I'm pretty sure you will come out of it. So be all good. Right, and check out PWBV. 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 Oh, did I just do that? Right. Hi, I've been in drawdown phase for 300 days and I feel like I'm in the most difficult phase since I started trading. Um, Unfortunately, that's just part of trading. It happens. It's just a case of how, how would I approach it? Let me get back to you with an answer. I'm going to think about that before I just start basically spitting things. Um, so we'll analyze this. Let me think on it. I'll have a decent answer. Okay, so far, Finn looks pretty solid here. Quite choppy here, but again, that's trading for you. Nothing's going to be exactly straight in the right direction. My guess is you've been excluded. Do you only trade like one asset? I'm guessing. No, not too bad. Gold, Nasdaq. Yeah, sorry, I'm just reading things just in my mind. So okay. Hmm. My guess is like people are being excluded just because the high correlation with like other traders. So yeah, there's quite a lot of like high correlation here with other traders. And my guess is that because there'll be a lot of people at heavy gold that are not trading other things simultaneously, or we might have just purely gold and Nasdaq traders. It might be a reason as to why. I mean, Kieran's probably the one that's got the best knowledge on this rather than me. I've never really understood it or seen too much of it, but my guess is it's always because it's correlated to other people as well. But returns are looking steady. It's looking good. Investor capital started coming in, which is always good as well, and you've got decent target allocation. And yeah, so far looking pretty solid. It's pretty solid. If we go down to annualized volatility, 11.52% is not bad. That's pretty good overall. Really good Sharpe ratio. Like that's really, really high, which is good. Yeah, that's gonna. I see as your track record goes on, like this is gonna see. You're gonna see this. You're gonna see this probably increase. Whereas he is busy doing a few things. What I don't know. So yeah, overall it's looking pretty good. Keep going. It's always good to see other traders doing well. 1,100. Yeah. Okay. I think this is maybe why that you're seeing maybe exclusion from gold, because the like literally are almost pretty much long only. So what Darwinex likes to see, from my knowledge, is we like to see traders both long and short. I know at certain times, like right now with gold, it makes complete sense to be long only, especially as well as like indices as well. I think it's because there's like so many traders long only at the moment, and I think we've seen a representation of that in the index. Like because the index is made up of a lot of traders. I think I've not had a look at the index in like a week or something like that. But January was really good for the index, and I put that down to probably a lot of good traders like taking full advantage of gold. And then February's been a little bit of a drawdown, but I think I've spoke to like loads of people, and February's been a reasonably tough month so far. So it is what it is. It's just part of I'll always just say it is what it is because it's just part of the game. We have good months with bad months. If you look at some of the best traders in the world, they've even had negative years. It's just part of what we do. It's part of the game. If it happens, it happens. But the most important thing is how we sort of bounce back and take advantage of it, like the learnings of that thing. So that's probably the best thing I can say about the 300-day drawdown. Even some of the best traders back in the day have had drawdowns longer than 300 days. The whole point about it is if you can control risk, so as long as you've not exploded, lost everything, there is a way back to recovery. It's if I was to give an example of one of my systems, right? Some of them have got more than a 300-day drawdown. That's why I do a portfolio, because it means that they're all kind of against each other. So then the drawdown naturally reduces. But I've got singular strategies that could go through 300 days of drawdown. It's just statistically it could happen, and it depends on like how loose your strategy is as well. So I wouldn't be too worried about it. Just constantly keep repeating what you're doing. If you know the statistics are there and you don't see any changes and it's within the sort of strategy parameters, I wouldn't be too worried. It's just going to be part of the evolution of yourself, part of the game. And it's going to be good learning. If you keep going, because a lot of people would give up and think that they've got to be profitable every month. So I would say, well, well done for sticking it out so far. Keep going. Keep trying to learn as much as you can as well. One thing that I always do is like I'll always every day I'll have a look at a sort of research paper or something like that just to get ideas flowing and sort of build something new and test something out, because I'm always in that sort of thought that, okay, what if my if it, like I right now I could just step away and just say, right, I'm happy with my portfolio, I'm not going to do anything again. But for me, I've always got that kind of it's not fear, it's just knowing that markets change just by doing tests, back tests and everything like that, that I know I need to keep on my toes to make sure that if anything changes, or if markets change, or let's say something else goes wrong, then I need to make sure that I can take advantage of the situation. So like gold's been pretty good for me the past 2 years, and I've completely took advantage of the situation of gold being going up. So I've had a few strategies tailored towards that. So that's probably the best thing I can do. Right, Rose, I'm at 20 strategies on Correlate at the moment. Not sure how many more to add. What do you recommend? So for that, I don't think there is a set number. It all depends on correlation. It all depends on what sort of thing you're wanting to do. So like one of the plans that I've got is I'm trying to build like a crazy portfolio. But again, it'll all be like risk adjusted. So like the question I always had myself is like I've got so many strategies that work in a singular pair, for example. How can I take advantage of, because all the edges will be slightly different, or different variations. How can I take advantage of all those edges? Obviously, you could add them all in, but what you would do is descale the risk, so then you're not overexposed to that sort of one market. So you're sort of like allocating X amount of your like sort of risk towards a sort of asset class or individual pair. It's all part of my learning experience as well, because I've only been algo trading for just over 3 years. So I'm obviously constantly evolving, learning, and trying to build out new things as well. So like I'm more focused now on portfolio construction and how to make essentially like a master portfolio, but taking advantage of loads of different strategies, risking such low amounts that like it doesn't even seem like, it almost seems pointless. But when you've got so many strategies together, it kind of all builds it all together. The problem that I will come into is I will essentially be a maintenance man, literally analyzing about 100+ different algos each and every week to make sure that none of them have reached past stagnation period, none of them have reached max drawdown, and that is going to be some job. So basically, I'll be a maintenance man, data analyst for myself, and I'm gonna have to think about a process into how to keep it efficient but effective, so it's not eating into all my time. Because obviously do stuff with Darwinex as well, and obviously I've got to build stuff for myself as well to make sure that I'm constantly evolving, and also have some free time sometimes. I think that's the downside. Like my free time is literally zero. But yeah, that's probably the best thing I can say. Like I wouldn't say there is a set number. Um, I would never ever say like 30 is the sweet spot or 100 is the sweet spot, because it all comes down to how you develop and build that portfolio yourself. Um, if you think about how quantitative funds will be working, um, like they could be pulling different traders, like hundreds of, like they could have 100 different traders, all with different ideas. So that means they could have potentially 100 strategies each. So that means you could have thousands upon thousands of strategies trading at one time. But what they'll do is obviously risk allocate to each individual manager, each different asset class, so then they're not overlapping exposure, high exposure to one sort of market as well as one sort of strategy as such. So that's the sort of thing you want to strive to. But the problem you have is obviously time and management. So yeah, I think that's why people build hedge funds, because they want to have so many different strategies, but they can't manage it all themselves. So I think there'll come a point where I know where too much is too much, but also like too little is too little. So once I find that sort of number for myself, I'll obviously feed that back. Okay, was it DHTH? DYTH? Sorry. All right. Okay. So it's very blockish. Do you, is this your Darwin? Yeah. If it is, what sort of strategy are you trading? Like exactly, like you don't need to tell me like specifics. Just is it is breakout, mean reversion? Is it grid, martingale, or is it like a sequence? Just so I can get a feel for analyzing it, because obviously you can analyze each different sort of style very differently. Um, Analyzing a breakout portfolio is going to be totally different to analyzing a mean reverting portfolio or strategy as such. So you'll see higher win rates in a mean reversion. We go breakouts, and then I could give you an opinion based on a totally different sort of set of rules and metrics towards that sort of singular construction. Um, but it looked like you got off to a really good start, and then since like March, kind of struggled. How we doing, Jay? How we doing, Jay? Yes, we'll have a look at that afterwards. No worries, man. Um, yeah, so it looked like 2023, good stable. 2024, again, decent, but obviously struggling in 2025. Let me have a look at what assets you're trading just to kind of get a grip as to what it is. All right, okay. So everything looks pretty good. US CAD a little bit high in the drawdown, but again, it's not a lot of trades to really like, because everything for me is about data. Like 46 trades is not enough to say get rid of it, but then the drawdown is quite big. Pancad, Dorian, not bad. I mean, it's cool to see like these sort of portfolios where it's very stable in terms of like it's distributed well amongst different currency pairs. Like that's what I would hope I'm trying to strive for. But it is very hard. It's very hard. Uh, I mean, pound dollar is probably the most obvious. Your win rate's really low, and drawdown's quite high on it. Like if you remove that, then it could completely erase a lot of a lot of the losses and returns. But there is a lot of trades. Win rate is quite high, so it looks to me like the win rates are like so different that it's hard to say what sort of style it is. Um, yeah, singular days of the week. So Tuesday underperforming as well. Again, what day is that? That's Thursday. So Thursday was doing great for you, and then again it's fallen off. So let's have a quick look. So long exposure 55%. So again, it's very balanced. Again, you're holding winners longer than losers. So from a metrics standpoint, it's pretty good in terms of like to have like hold like everyone knows you hold your winners and cut your losses short, so that kind of meets that methodology. You're 50-50 almost in terms of long against short, which is also good as well from a perspective. Like it does not always mean you're going to get better returns, but it just means that you're not sort of biased to one side of the market. And again, the VAR control is pretty good. Like your VAR's been like lowered quite well, so there's nothing crazy in this. Monthly rotation again is pretty stable overall. So, again, there's nothing I would say that is standing out like a sore thumb. I would just maybe have a look at some of the singular strategies. Like, that's a lot of trades compared to, like, these are really good stats. 201 with a 70% return on. I don't even know what that currency pair is, so someone can tell me. MXN. I've never traded anything like that, so someone tells me in the comments what that is. That'd be interesting. Or I can probably check it myself. Let me have a look. USD MXN. What is that? Mexican peso. All right. Okay. Interesting. Interesting. Um, Never traded that mark or even looked at a chart on that. So you've got me intrigued. You've got me intrigued. I might have a look at it and see and have a look. I'm guessing like spread and commissions might be quite high on that if you're holding it for a longer period of time, which maybe suggests why your hold time's like 16 hours, so you're not getting caught with swaps. Unsure. That's me just making a presumption. Again, European session quite good. Asian session quite good. Again, another one of the American sessions. I'd be interested to see, Jay, if yours is good in the American session, because that's quite a few that I've seen that American session's been struggling a bit. But for me, there's nothing here that's like staring out like a sore thumb, other than maybe like looking at pound dollar, looking at like like you've got quite a lot of trades on pound dollar with very low win rate, and it's kind of ate a lot into your sort of returns and drawdown. Apart from that, it's hard to say. You know, I mean, I would have to know if you're like a algo trader or manual trader. It'd be very interesting to know to be able to sort of like say anything. I can never be able to say. So we'll have a look at GSQT now. We'll look at GSQT. Okay. So this is your portfolio J, or Darwin, as I should say. I always refer to things as portfolios because I keep saying the word. Um, Looking really stable so far. Really good start for your first. I'm guessing you opened it in November and just started in December. J, you're a manual trader. Okay, interesting. I would have to look at your pound dollar and like maybe do a little back test against it, because that seems to be weighing you down. But it could just be a new like equity low in it. Again, it's hard to say without having a good sort of idea into what your back test would look like, and what sort of like measurements are you doing with it. It'd be quite interesting to dive deep into that as well. So maybe we can leave that for another day, or if you want to message me, then we can have a little dive deep into that as well. So yeah, good start in December, January, and February. Really good max drawdown so far. So if you can keep this up, this is really good. Um, Again, let's have a look at assets. So commodities, I'm gonna guess it's all gold. Ah, you got silver in there as well. Not bad, not bad. Yeah, so pretty good taking advantage of the volatility of gold and silver. I take it that's mostly in January. Your returns for that. Dollar yen again, nothing too crazy, but there's not a lot of data for me to say get rid of it or have a look at it again. It's nothing crazy. Nasdaq 10, interesting. So a good spread between FX, commodities, and indices. That's always good. It's something I'm looking to bring in indices this year because I've never really traded them. So good to see that you're sort of like, it kind of almost looks like quite well balanced overall. So you've had about 50 trades there. Yeah, 35. Yeah, so about 40-40-20 at the moment, but I'm guessing that the change will be a little distributed. Okay, so you've actually done what? So again, American session is where, so maybe it's just situational at the moment that American session has not been the best, but then American session is from 4 GMT. Yeah, so it's from open at that. Okay, cool. So that is Okay, interesting. I don't really take too many. Maybe I do. Interesting. Again, we can't say anything about days of the week, I'm afraid, Jay, because it's just not enough data. So this would be a really good one. I'm going to put this in the notepad, and then we can probably review it. It'd be good to do like once you've had 6 months, and then once you've done a year. It'd be good to review it then to see how things have changed. But off to a great start. Continue what you're doing. Well done. It's always good to see other people doing well as well. Let's see if you've got any correlation with anyone. No, so pretty good correlation as well. Um, Quite high long exposure, but my guess is that's because you're probably a lot of long trades in gold as well, silver. That's what my guess would be. Prop factor pretty good. Duration, yeah, this is exactly what I'd like to see. Like this is good. 7 hour, like you're holding your winners about 2 to 3 times more than your losers, which is always good to see. Uh, I think the risk system does favour these sort of things, and then your VAR's been pretty consistent here as well, which is always good. Like risk, keeping your consistency and risk is one of the most important measures. Like if you have a losing period, like don't increase your risk unless it's like linear across the board and you're doing it for a reason. Like I always just keep my risk very stable, consistent. If anyone's ever been on the lives before, I always do very low risk, like 0.05% risk per trade. And like that is seriously low, but it allows me to be very stable over the long term in my live account because unfortunately I don't use zero. I use a classic account. So I because it's my own real money, I want to make sure that it's a real nice stable that it doesn't matter what sort of day I have, like it doesn't phase me. Like I always say, like you know, trade with a size of risk that you're happy if you're a trade while you're sleeping. Because if you're not, then you're not going to get good sleep because you're going to be constantly thinking about it. So that's the way that I think when it comes to like risk. That's why my risk is low. And it also allows Darwinex to like scale my risk up anyway. So for me, it doesn't really matter too much. I let the risk engine completely take control of that. As long as I control my risk from my end, I know that I can fully trust in the risk system. Like everyone's quite some there's some people that are against the risk system, but if you're thinking like how like a hedge fund, if you were a hedge fund right trying to like recruit someone, what would you want to see? That's the questions that I asked when I first joined Darwinex to build that sort of portfolio, and that's why I was like, right, okay, hedge funds like for the most part, like yes, they want the best returns possible, but they're always looking at the downside first rather than the returns. So if you can have a crazy low downside while beating the S&P, you're already in a win situation. Which is why DarwinX, it kind of like that sort of style really does like complement it. Like yes, the drawdowns can be bigger in DarwinX because of the risk engine, but again, like it suits it because I know that it's not going to be too crazy, and it means that when you do like lower risk, the compounding effect obviously is like hardly like, it is there over the long run, but it's not going to be compounding over like 10 trades. It's going to be like a couple hundred trades for the compound to really affect. So that goes for the upside as well as the downside. So I'm always thinking from the downside first, upside second. So as long as I can manage my risk to the downside, I know that I can come here tomorrow, like not knowing that okay, if this strategy is underperforming, I don't need to make a change within an hour. Um, like obviously, like I have like what's classed as like warning zones as such. So like I've got a max drawdown, but I've also got like equity low drawdown. So my max drawdown is always slightly low than the new equity low. As soon as it hits a new equity low, that's when I start analyzing like deeply into do I want to continue trading this strategy? Have I first of all have I made any changes? Because if I've made any changes and it's still making new equity lows, I know that essentially the edge could be completely gone in that strategy, and then I move it to the sub account. Or is it just like if I've not made any changes, okay, what could I change that could meet the market? Like, am I losing to the long side or am I losing to the short side? What sort of market regime are we in? Ask all of those sort of questions to myself before I remove it. But because like it could be like 2 days, 3 days, 4 days before I take another trade, and I'm losing like 0.05%, like it gives me time to sort of like okay. I don't need to move this yet. This is new equity low, or you can do some really good deep dive analysis on that. So that's one of the best things that I find that you can do with risk and low. My profit identifier shows 1.86, but Darwin shows 1.52. Any ideas why that would be? All trades closed, so it would be very similar. So the what the risk engine sometimes does is if it sees you as overexposed to one side of the market or your bar gets increasingly high, it can shut certain positions earlier, which in turn, like if let's say it shut a winning position earlier, then that would reduce your obviously your profit factor on that overall. So that's the one thing I would say. Like if you're like risking high, like and you're taking multiple positions, then the VAR system will descale it or shut positions simultaneously early. And the whole point about that is just so it's protecting. Like everything at Mind is always about drawdown investors first, because once you've done 8 months and you're in gold, then you are open to investors. Um, and again, like that's what what you want to do is protect your downside first. So that's what the risk system is there to do to make sure that no one can go in a kamikaze run, opening 100 lots and then losing the whole account within tomorrow. The whole point is that the VAR system will make sure that from the signal account to the actual account, or from the MT5 to the signal account, it's not going to blow up. So it's all risk in mind. You can always go read the value at risk document. It's well worth doing it. And understanding Monte Carlo analysis and things like that are always very helpful. It's something that's not really taught well in the retail world. So, like, understanding Monte Carlo analysis and value at risk is very important, because when you're going into Darwinex, you're entering a sort of like institutional sort of standard as such as to like risk adjustment. So it's very good to understand these sort of things, because it'll once you do understand it, it'll make you a better trader, probably a better understanding of risk and how like funds and like asset managers will actually control risk. Also, like it'll help you as well in the long run for yourself. Very worthwhile doing. You can find books online about there's podcasts out there that explain portfolio management, but it's something that is underutilized. And totally underrated. So, like, you can read Trading in the Zone and things like these. Psychology books are great. But the next thing that you should be reading is like portfolio management. How do like investment managers do these sort of things? Because that's where it really leveled up my game essentially. I didn't know a lot of things when it come to that. Like I was kind of just putting things left, right, and center together. But then when you go do all these research and these sort of things, it can really help you in the long run, because it gives you a totally different perspective and viewpoint of building a portfolio and constructing it. So that's my recommendation for anyone here. That if you want to take it to the next level, which is I hope everyone wants to take everything to the next level here, because that's what we're trying to do as traders, trying to get to the next level, trying to be better, trying to get the best possible returns with the best possible drawdowns. So yeah, that's ramble over there. Does anyone else have a Darwin that wants to be looked at, or have any questions about anything that I've said so far? If not, I will probably just pick another random one. Let's. How do we pick a random one? Just press this button about 10 times. See if we can get a longer track record here. How can I see? I don't really use DarwinIX Zero platform that much. I use it for analyzing all my like data and things like that because it's really good. Um, the metrics on it are really good. But then obviously I've got the DarwinIX Classic like dashboard, so I get to talk about that. Okay, let's have a look at this one. This is quite interesting. Yeah, pretty stable so far. Although, do we reckon that this is martingale? 100%? No, it's not actually. Wow. 96 days average winning position. That surely can't be right, is it? Well, I've never seen metrics like this, but again, it meets the criteria hold your winners longer than your losers, but that is. I've never seen stats like that, like holding trades for that long. That's a long hold time. Like when I done manual trading, must be like 3.5, 4 years ago. Like I was more of a swing trader, and like most of my positions would last like a week. But I did have one that was like 40 days, and I was like, that was mentally tough. But holding a trade for 96 days is mad. Not mad in a bad way, you know. Fair play. If it works, it works. Okay. Now it makes sense. Now it makes sense because this is more. This looks like more stocks. This is all stocks. Now it makes sense. Now it makes sense as to why the whole time's so long because yeah, that's cool. That's cool though. Let's see. Maybe not. How do we let me just pull up something else. I'm just gonna pull up my own like sort of Darwinex account. So just give me a second. I'm just gonna log into my own sort of Darwinex Classic, and I'm kind of a quick look at. No, I don't want to go Darwinex Zero. Sorry, nothing will be shown at the moment. Right, there's that. There's that. Right. Okay. Let's have a quick look at some Darwin's on the Classic. Just gonna get the stream up again. There we go. Yeah, stocks are often more hedge strategy. Holding and forex usually around round trip. Yeah, yeah, exactly. Mostly because hold times can be pretty crazy and costing can be pretty crazy. I'm guessing he's got like the stocks account anyway, so like costing's not too bad. All right, okay. Let's can we see more of how the index is doing? Maybe not. Maybe not. Right, let's have a look at the index. Okay, so we've seen a little bit of recovery in the index. It's only down 5.9 so far, so not too bad. Seen a little bit of recovery. You know, as you can see, like that was a crazy good January, which can happen. Like last year's returns were brilliant. 7.61% is good. We're only up 2.24 at this moment in time, but you know, if we look at the average return, like there is some years that are like, you know, still really good returns, but there's some years like that. 2021, 51%, crazy, crazy. Good to see that there's now 21 million in the index with 438 investors. Um, so good to see it from that point of view. Let's see. Can I? Yeah, I want to go to here. No, I want to go here. How do I? It's because I'm in that one. That's why. Right, let's go. Let's have a little look at. Let's have a look at someone that's been doing good in the last 6 months. Jesus, 72% in the last 6 months. That is. I'm interested. Wow, 118% last year. See, as you can see, like the metrics are very different from classic to um, Darwinex Zero. I actually prefer the Darwinex Zero sort of like statistics that we can look at because then we can look at day of the week and things like that. So it's always good to see it from that point of view. So I normally what I do is like have a tab and I just change the ticker in the Darwinex Zero to have a look. Uh, that was just a crazy sort of pump, and it's kind of like lost momentum at the moment. So maybe not something we'll be looking at. Let's just take like one at random. Let's have a look at. Yeah, this one looks really really good. Again, we're seeing massive months here. Like I couldn't imagine having a 21.89% uh, month. That'd be crazy for me. Like because the low risk is crazy, but it's looking not too bad. Yeah, we'll have a look at that. Give me a sec. Let me just put the ticker in. BXSQ. All right. Yeah, I remember you putting in Discord like Darwinex Zero not knowing what to do here. That's quite funny. Overall, looking pretty stable. Pretty good so far. You know, it's not looking like the as much as we all want perfect curves completely to the right side. If I just literally see a straight line, I always get a little concerned. But we can see that there is peaks and troughs here, which is always good to see, and I think it's a bit healthier to see than like straight lines. But yeah, not too bad a return. Like you can see, your drawdowns are very well controlled so far. You know, 6% drawdown is very well controlled, especially with the risk engine. So kudos to that. That's pretty good. Decent Sharp ratio. Good Sorrentino. Like obviously that can change as time goes on. So can this, which is good to see. Initial big drawdown, but nothing too crazy. Nothing that looks bad in terms of drawdown health, like the health of the drawdowns, which is good to see. Let's have a look at like everything, like your sort of like metrics across. So like, seems like you're taking a decent amount of trades. Again, commodities is your biggest asset in terms of games. Gold, I'm guessing silver as well. Yeah, so good to see that you took advantage of the volatility. It's always good to see people taking advantage of the volatility. Um, Nothing to say too much else in terms of individuals because there's generally not enough data for me to say drop something, so it's all good to see. Yeah, interesting. Good Asian session. That's interesting. So my guess is a lot of the trades like were taken during the Asian session when we had that bullish run, naturally, but still well done to take advantage of it. Like anyone that's like, oh, you've just traded gold, you got lucky. No, I think if you traded gold and took advantage of that, well done. You've got to make the decisions yourself and take advantage of it. Days of the week are a little bit skewed at the moment in terms, but then there's not enough data for me to say hey, you need to look at this day or this day or this day. Just keep doing what you're doing. Good amount of trades. Like I know it's a lot of trades overall in this period of time, but we've not had like you could have 100 trades like every day, but you could do that for like a week. But you've only technically had one Tuesday or one Wednesday or one Thursday, so we've not had enough singular like days of the week. So trades doesn't matter. It's normally how many if you've taken a trade or multiple trades on days of the week. So keep up what you're doing. Everything looks good. Everything's going in the right direction. Higher long exposure, but my guess is that's because of gold and silver again. And win rate reasonably good. So my guess is you're a breakout trader, basically. You know, I can have a look at like win rates, and I would say anything between that 35 to 45, or just a little bit above that, or even as high as 50 is more normally breakout trading because it tends to be that you make a lot of your returns in a couple of trades or a handful of trades, and then you have small wins, small losses, small wins, small losses, big wins. So yeah, keep up. Looks good. Looks good. Don't really have anything to add to that for you because like there's just not enough data for me to say anything. But all I will say is well done. Keep it up. Let's look at KSEU. Okay, here we go. Interesting. This is looking very, very smooth with some dips. So I want to see everything else. Like, let's have a look. So your day, I know as volatility is good. Sharp ratio is seriously good. Like, that is crazy good. Returns are really good so far as well. Like, really good stable returns with a low, with one low losing month. Okay. The only thing that maybe concerns me a little bit is your drawdowns are very steep and sharp quickly. So based on that, I would maybe say that you're doing some sort of grid trading, or maybe there is a sort of like sequential martingale within there in your drawdowns. But I could be wrong. I could be wrong. It just looks very sharp, the drawdowns overall. But still, hats off to you. Returns are looking really stable and really good at the moment. Investments obviously clearly coming in as well. It must have a decent amount of Darwinia capital. Yeah, 240. So yeah, €855,000 on asset management. Well done. Keep it up. We'll have a look at the old assets. So dollar yen, dollar yen, euro dollar, 2% return, 25,000 trades. Jeez. Someone likes to trade a lot. Fair enough. Each their own. Like every strategy is different. It's a lot of trades. Interesting that most of the gains, again, have come from gold, which is interesting. But euro dollar is a lot of trades. Your risk stability must be like really low, or your value at risk must be very low. The fact that the average returns are low, or maybe it's just the risk. Uh, Maybe it's just the risk size that is de-risking your. We'll have a look at the VAR anyway, so we'll have a look at that. Days of the week again pretty stable. Wednesday being your best day, everything else being reasonably stable. Nothing that's saying stop trading it. Lots of trades. Good rotation between Asia and European. Again, American. American seems to be a lot lower for everyone. Um, but it is what it is. Let's have a look at this sort of risk. Yeah, so value at risk is here is it about like 30 to 32.66. So it's reasonably high, I would say. But it's been consistent, which is also good as well. So I quite like that. Like the risk has been very stable across. Like, but it is like you're risking a little bit higher, but again, it's been consistent across. So yeah, no, everything looks pretty stable. The only thing that I was concerned about was obviously the drawdown periods, but it is what it is. If this is working for you, don't change anything because everything so far looks really good. Looks really good. YGFY. So $7 brand new. Not too much you say about it. Makes just yeah. I'll have a look at it. We'll have a look at anything that's put into it. Um, YGFY. Yeah, so far so good. Pretty good start for only being in a just must be just over a month today. But everything's looking good. Really good February. Well done. Most people have been struggling in February, so to get a good return like that in February is really good. Uh, so just over a month, but how many trades? That's a lot of trades for just over a month. What sort of strategies is this more like a scalping sort of strategy or something like that, or taking advantage of like loads of different things at the same time? Yeah, 244 trades in a month. It's a lot of trades, but at the end of the day, I don't have a problem with how many trades that you're taking. If it works for you, it works for you. You know, I would love to take more trades and just split so many strategies into from one into like 10. That would look like I'm taking more trades, but the overall risk is still the same of 0.1 or 0.05. So, yeah, I'll never say anything about how many trades people are taking if it's working for them. Good stability again, like across it, looking good. Looks like you do not trade Friday. Either you do trade Fridays. Yeah. So far, so good. Um, I mean, 1,200 trades, long exposure, 90% win rate is quite high, but hedges against our swing position with scouts, I guess you could say, okay, interesting, interesting. You know, I'm always interested in other people's strategies because everyone else does it differently. And I think that's the beauty of trading. There is no one right way to go about it. Some of us prefer other methods to others. So, yeah, pretty good, pretty good. Bert, what size account do I get with DarwinX? What do you mean by that? So, like, DarwinX, like, you can either do classic, which you put your own money into and trade it as predominantly as a broker, uh, or what you would do is like you've got your different sort of Darwinex Euro accounts. So you've got your CFD account, which would be a 100k virtual account. If you do futures, it's a little bit more expensive because you have to pay for the feed, but that is a million, I believe. But again, like it's not a case of you're trading that. You then use that to get a track record. From that, you can then get virtual allocation from our DarwinIA program, that anything that you make on that, you would make 15% profit split on that. After 8 months, you can then get into gold, which then actually opens up yourself to investor capital. So that could be from third party. Anyone that's an investor on the platform could invest in it. And also, we do have our own sort of like index that invests in traders as well. So there's lots of ways that people can get more assets under management via Darwinex. There's just different ways to go about it. I mean, I would say it's definitely for people that are serious and wanting to sort of build a track record out, but also like potentially move into more asset management because that's essentially what it is. You know, when you've got assets under management, you're being an asset manager. So yeah, there's not a case of what size account do I get with Darwinex. It's like if you get the virtual CFD account, you get 100k virtual capital, but that you can't make money on that. You have to then get qualify for the Darwin allocations, which is simplified rating or more, and it's all based on return to drawdown over the past 5 months, I believe. 5 months. It's been that long since we had silver. I think it's 5 months, and then the rates go up to 100, and obviously first to whatever the place is depends on what sort of allocation that you can get. So yeah, I hope that answers your question. But definitely consider it if you're a serious trader and looking to sort of scale up. That's the best thing I can say about Darwinex. You know, before I come on board with Darwinex, obviously I was a customer first. So yeah, I believe in the model. It's probably the best way of entry model for retail market into doing what Darwinex do. So I can only vouch for them. So yeah. Okay. I think we kind of went over everything here. Oh, we didn't look at the signal counts value at risk. Yeah. All right. Okay. So value at risk is really low here, which is really good. This is what I like to see. I like to see a very low value at risk because then that means you're like thinking from a low risk perspective, which is resonates with me. So yeah, I quite like that. I mean, monthly iteration is obviously increasing. So okay. I wouldn't be too bothered about that. Mm, yeah, so it's kind of going up a little bit. But then again, the value at risk is quite low. So yeah, pretty good, pretty good. Keep up what you're doing. Again, it'd be great to sort of come back in 6 months and we can evaluate your Darwin again. So to see from what we've discussed today, how it is in 6 months' time. Like, I think that's always good. We like to see progression of everyone, you know, so it's always good to kind of see that. Okay. Um, yeah, unless anyone else has a Darwin to put in, I don't have anything else to share today. If anyone isn't already, please join the Discord because right now on Tuesdays, sometimes Wednesdays now, it's kind of overlapping into Wednesdays, isn't it? We're doing more like development sessions and stuff like that. So basically, me and Kieran are building algos to put on a charity Darwin. All proceeds will go to charity, but we're also trying to like help people learn and like how kind of the basics of how we're going about building systems and like evaluating them in a portfolio. So if you haven't already, do join and drop any ideas that you want for like builds on the Tuesday. Drop them in there, and we can evaluate them and see if it is going to be plausible to build on one of these sessions, because unfortunately now you'll have me for the foreseeable for now on a Tuesday with Kieran. So any ideas that you want to drop me, obviously I can put them in the pipeline, so everything's good. But if no one else wants Darwin, then yeah, thank you very much for joining me today. Thank you for everyone for putting in the Darwins to having me to analyze. I hope it's been somewhat helpful in a way. Like for the most part, like I don't really do too much analysis on individual Darwins as such, because sometimes, like as I've said, like it all depends on the strategy, it all depends on the asset. Like it all depends on the singularities for me, I'm afraid. So I'm never going to say, yeah, your Tuesday is terrible, don't stop trading unless it is clear, if that makes sense. So yeah, thanks for joining me, and we'll see you on Tuesday if you do join the Tuesday session. And everyone, have a good weekend. Okay, when it comes, because obviously it's only Thursday today. Thursday, yeah, awesome. Thanks very much, guys.